Hi, my name is Josh Mahony, Chief Market Analyst at Scope Markets. Let's look at some of the upcoming earnings for the week starting Monday, the 27th of May. But by and large, as ever, things really start getting a little bit tasty in the middle of the week. Bearing in mind, most of the S&P 500 have reported 96% of it, and therefore the likeliness for big fireworks in terms of the wider market is lessened somewhat. It's notable that generally when we see companies report at the beginning of the earnings season, you'll see the rest of that sector really trying to take a lead from that. And you see volatility for other names within the sector. And that somehow lessens the volatility that we do see when those names report themselves or can do so. With a week that's just gone focusing heavily on NVIDIA, really the tech sector has been lifted as we exit this earnings season, and it's going to be in play once again this week with the likes of Salesforce and Dell in particular, two of the companies that I'll be looking at. First and foremost, let's look at the big picture and see how things are stacking up. Here is a breakdown of where things lay essentially at the back end of earnings season. What's notable here is that technology has done particularly well in terms of the earnings per share, beating on 89% of cases. Revenue less impressive, but by and large is the earnings where you typically see outperformance and a little bit more changeable when it comes to the revenue side of things. Another thing that we're going to be looking at today is the consumers. Now, bear in mind, we saw Target underperform when we saw Walmart outperform. And that breakdown between, as we have noted here, cyclicals and non-cyclicals, or otherwise known as staples or discretionary consumer goods, that really has been quite distinct as people are trying to transition away from expensive items into maybe cheaper alternatives, but also transitioning away or doing away with purchases that they can possibly hold off on for now, and maintaining those products that are absolutely critical to their lives. And certainly when we look at Best Buy, that's exactly the story that we're going to be telling within that. But let's kickstart first and foremost with Salesforce, of course, an absolute tech giant. And coming off the back of that NVIDIA earnings release that had a little bit of something for everyone, really, with the stock split, with a positive outlook going forward, beating on the top line and the bottom line. There is a hope that we will see a similar kind of thing here for Salesforce in terms of strengthening of the business, in terms of the growth of their AI offering. And you know, you would be forgiven to almost forget about Salesforce because of the fact that generally they're not necessarily as commonly talked about within the tech space as some of the other sort of massive names within the Mag 7. But this is an absolutely huge company, and it has shown itself to be well positioned in terms of growing going forward. Now, that's something that I really want to hammer home at the moment, because if you look at the annual expectations here, this is the earnings per share that we're looking at here. The expectations from an annual basis here really do point towards a possible massive surge over the coming years. You look at where we are now, 822, the expectation by 2027, 1670. So you're talking about possibility of within 4 years, essentially doubling in size. Now, that may not necessarily seem as impressive when you compare it to what's been happening over the past year and what's expected for this year for NVIDIA, but certainly it's very impressive to me. In terms of what the company's managed to do against earnings expectations, I think that's key. You can see here that they've managed to beat on the last 8 occasions. This is on the annual basis. On the quarterly basis, we can see a similar kind of thing. So great. They do well against expectations by and large. In terms of the revenue side of things, again, expected to steadily grow things on an annual basis. They outperform on the revenue side of things on both the quarterly and on a year-on-year basis. So the long-term trajectory looks good. Their ability to outperform expectations looks good. How are things shaping up? So we've seen this market rolling over, starting to retrace somewhat and recover some of that, but now starting to weaken again as we head toward these earnings. If we look back at prior occasions that we've seen the earnings coming out, let me just put this in full screen. The prior occasions that we've seen earnings coming out, you can see back here in the back end of February, we saw earnings. we saw a bit of a pop on the day, but then we entered a period of sort of consolidation. Earnings that we saw here back in November, again, we saw a nice pop here, but actually that instigated a longer term move towards the upside. Again, here a pop towards the upside, but that faded somewhat over the course of the next month. On this occasion, we did see a move towards the downside, but generally, I would say over recent quarters, the trend has been a positive one and has generally provided a pop on the day. So that does give us a little bit more of a bullish bias coming into this. Like I said, we've started to roll over a bit of late, but let's look at the long-term trajectory. You can see that that pullback has come from an absolutely key area of resistance. 311 was the peak that we had back in late 2021, and we've been rolling over since then. Arguably, you would just be able to look at this and say, well, look, we've had a strong move towards the upside throughout the first half of 2023. Then Q3 of that year, coming into the back end of the year, we saw sort of consolidation / sort of retracement, and then we've been moving higher since then. So that would point towards the current phase potentially being something akin to that move that we saw in the second half of 2023, taking some of the heat out of the stock after what was an absolutely bumper rally up from, from $2 up to sort of 320 and up to that sort of 311 resistance area. So pulling back, I think there is a case to be had that we're essentially just in a retracement phase once again. And given the trajectory expected over the coming years, given the ability of the company to outperform year on year, quarter on quarter on both earnings and revenues, I would say that this company does look like it could be in a relatively positive position. Price action doesn't look necessarily great at the moment, quite frankly. If we're looking at this as a retracement, the question mark is where are we retracing from? Are we looking at this retracement? Well, that would come in absolutely perfectly recently with that 76.4 Fibonacci down here at 266. If we're looking for a wider retracement, well, we're not down into the deep areas quite yet from that perspective, but selling off somewhat. I would say look out for this 266. I think it's a good chance that we do see another potential pop for this stock if it does outperform. But going by experience, that's what it has done time and time again over the quarters and over the previous quarters, but over the previous years. So keep a close eye out on Salesforce going forward. It has been a good performer. And, if you look at the previous ability to outperform market expectations and the expectations in terms of where things could be in a few years' time, this does look like an attractive stock, and it does look like a really interesting stock to be trading. Next, I wanted to show you what's happening in terms of Best Buy. Now, Best Buy report on Thursday. All three of these stocks are after the close in the US, first and foremost. So Thursday, the 30th of May, what are we looking for from Best Buy? Well, it's notable that Best Buy, like I was alluding to earlier, are falling within the discretionary side of things when it comes to consumer goods. Now, consumer staples have done very well, in particular companies that can provide a product at a competitive price, like Walmart. Walmart do provide products across the board. But Best Buy, I would say, fall more firmly within the discretionary side of things, big ticket items, electronic goods, and the like. And those are the kind of things that, as we heard with Target, generally consumers have been allaying those or pushing back those purchases, potentially waiting for a sale. Maybe they want to buy it around Black Friday, around Christmas, or something like that. Rather than just buying it at a whim at full value, because at the moment people are struggling with inflation pressures. They want to maintain their quality of living, and so they're buying their everyday items. Where possible, they're switching out for a cheaper alternative. But you would say that the discretionary side of things does provide the area of potential concern. That appears to be exactly where Best Buy are positioned. Now, in terms of the longer term outlook, in terms of expectations, let me just quickly go back to this here. So this is the annual outlook for revenues. Doesn't look great. It looks pretty much flat to me. Where are we at the moment? 43.45. Where do we think we'll be in 2027? 43.62. Not very different from where we are at the moment. So are they going to improve margins? Potentially. So appears to be a question of hoping that they're going to improve profitability and earnings per share improves while revenues are relatively flat. It's not necessarily a great backdrop for the company, and given the fact that they're in an area that's somewhat questionable at the moment in terms of demand, that is something worth noting. Now, you could say, well, expectations of 108, compare that to where we were before. It's below the Q1 2023 figure. So are we actually setting a relatively low bar for the company to outperform? Well, you can see the past 7 occasions they have outperformed. They're sometimes pretty heavily so. In terms of the quarterly revenues, a little bit more changeable here. You can see here, it's on off in terms of their ability to outperform expectations on that front. In terms of the share price, we can see that, let me just go out to the weekly time frame. It's not in a great position, quite frankly. You can see that we sort of peaked out back here at the back end of 2021. We saw this collapse into the mid part of 2022, and we've been largely range bound since then. If we're looking at the sort of areas or thresholds that markets have been sort of respecting, I mean, they're not necessarily perfectly lined up. I'd say it's that kind of zone here. And at the bottom end, you're looking at this zone down here. So 60 to 64 up to 85, 86 kind of area. And we're in the middle part of that, I would say, but we're heading back down towards the bottom end of this range. If we look at sort of price action around previous reports, we can see back here, we saw this big pop, and then it ultimately faded straight away after. We can see on this occasion, we did see a initial fade, a sort of gap lower, and then we recovered from then. So very interesting. We sort of pop and reverse, and we sell off and reverse towards the upside. It always seems to be the case that it's fading any initial move. A similar kind of thing here. You can see that the rally, but ultimately continued that bearish trend. Are we going to see something similar? Well, it's notable that these moves have taken place. If we're looking here, this was taking place at that support level. This took place at that resistance level. So are we going to fall back towards that level before the report? It's still some way away from it. So probably not, quite frankly. But given the fact that we're sort of in the middle of this range, which is something similar to what we have here, there's a good chance that maybe even if we did see relatively strong numbers, we could see that sort of pop and fade move to continue the move back down to the 64 to 60 support zone. Possibly so. Ultimately, they have managed to do relatively well in terms of outperforming expectations. But I would say that the story behind this company isn't necessarily filling me with confidence in terms of how they're positioned, what they're selling, the trends within markets that we've seen from some of the other businesses in the sector, and the share price, which is range bound and heading towards the bottom end of it. So certainly one to watch out for, potential volatility ahead, and potential for that initial move to be faded, because that's what we've seen time and time again in the past, that the initial move is often the opposite move from where things end up, a week, a month, and a few months out from that period. So certainly a really interesting one to be following at the moment. And then finally, let me just quickly grab the final one of the lot, and that is Dell. So Dell, if you're anything like our company, you're likely to see within your office place that all of the PCs are generally Dell. They are absolutely smashing it when it comes to laptops and PCs. But the question mark here is, they've got that great position, but are we going to see the introduction of new AI elements essentially sparking a rush to renew the supply of PCs, laptops within businesses? That, I think, certainly personal computers as well, away from the business demand. But that, I think, is a key story to be looking at. It's a similar kind of thing to what we're looking for with Apple, where you've got the possibility that people are going to say, well, normally I get a new iPhone every 3 years. But now we've got this new technology on board. We've got this new feature, and that makes me want to buy it more frequently. Are we going to see something similar coming into play for Dell? Because if so, it provides us with a key narrative that could provide upside for this company. In terms of where things are standing from a wider perspective, here's the annual figures. So annual Earnings per share expected to gain ground over the coming years. You can see 2024, 25, 26 all expected to see significant gains, not necessarily as impressive as, say, Salesforce with these numbers. And then revenues, again, expected to increase somewhat, but not necessarily anything too crazy. If we look at prior performance, we see general outperformance on the revenue side of things. On the earnings per share, we see absolute outperformance, sometimes by a pretty significant amount. So the earnings per share, as we saw with the outlook, the sort of overview that I provided at the beginning, it's earnings that they can generally outperform on to a greater extent than revenues, which have been relatively mixed. So certainly traders going to be keeping a key eye out for those earnings per share figures. You can see 125 expected. That's lower than the 131 from last year. And that was well below the figure from 2022 of the first quarter. So relatively low bar. And considering the fact that it has beat over the past 8 quarters, are we going to see something similar this time around? Generally, I would say earnings per share appears to be the thing that companies are sort of guiding you on, and that provides them with the basis for them to outperform. There's an art to outperforming expectations, and these big businesses have it down to a T. So here's price action. It's been on an incredible run over the course of 2023 and into 2024 in particular. You can see this sharp ramping up in price action coming alongside the gains that we've seen for some of the big AI names. And the hope here is that they'll be able to jump on board that bandwagon and similarly take advantage of that. Into the daily time frame, you can see here that we're seeing this very clear, considered step move higher. And the most recent rally has sort of taken us a little bit away from ourselves, certainly seeing a nice strong move up into the 160 mark and fading at the moment. So we could see some near-term downside, but I would say, look, ultimately, whether we see this pullback or not, this market is very clearly within a bullish trend. It is a momentum play as things stand, and near-term pullbacks are likely to be seen by bulls as a potential opportunity to jump in once again. We're seeing here almost 5% gain on the day, and that's despite a fade, and that's after the NVIDIA earnings. But certainly this is a big tech name within a buoyant tech industry. I highlighted at the beginning of this that the tech sector has outperformed. You can look at what they've done over the past 8 quarters. They've beat on earnings per share every single time. So I would be looking for something relatively similar if we were looking for those prior trends to tell us anything about this upcoming report. And there is a potential sort of renewing cycle for businesses like Dell, like Apple, because of this AI technology as they build more of it into their products. So certainly it's seen a nice strong surge. If we do see any near-term pullback, people are likely to see that as an opportunity rather than a sign of weakness, with a breakdown below 114 required to negate this bullish trend that has been really dominating this year in particular. It's been an absolutely incredible year. If we look at the year-to-date figure, there it is, up 105% year-to-date. So not too shabby. Certainly, this is going to be another key market to be keeping an eye out on as we look into an earnings week that, yes, it is relatively quiet in terms of, or relatively smaller number of names coming out, and there's only a few percentage left of the S&P 500 yet to report. But that doesn't mean that there isn't anything for equity traders to sink their teeth into. As I've highlighted today, we're likely to see continued volatility around these earnings reports. And there's certain companies that if you look at their prior performance, if you look at do they beat expectations, what's their share price been like in the fallout of those reports, it does give you a good idea of exactly how things could shape up for the week ahead.